grant should have already been paying for, right? So we have to think about it that way. You're supplementing with most grant. If you're talking about staff, you need to supplement. Now, again, if you're starting from scratch, you just put in, here's the people we're going to need. You don't have a problem with supplanting because you didn't have anybody to begin with, right? But make sure if you're going to add people to your staff that you're not taking one person out to let them go do something else and replacing them in that kind of capacity. Okay. All right, let's talk about travel. Travel means getting from one place to another, which none of us do anymore, right? So we don't have to worry about this. We can all just forget about that, right? But hopefully at someday, of course, in Montana, you guys can leave. I haven't left the house in months, except to go to the grocery store. So you have all that fresh air, warm weather. It's like 900 degrees here, and we can't leave. So feel bad for me. It's the most fun I have all day is pretending to breathe your Montana air, okay? All right, so travel, of course, getting from one place to another, and this includes eating and lodging. Don't forget, though, the tipping and parking and tolls. Like, so some of you are going to say, well, I'm beholden, we only have reimbursement rates for whatever. Yes, that's true. For a lot of you, that's going to be the case, right? But if you're working on a grant, if you're working on asking for additional grant funding, again, that you may not be beholden to that kind of thing, so you have to think about it. You have to ask and look and see. So the kinds of costs that can really be incurred during travel are numerous, but we can still list them. Travel is relatively easy as a direct cost to keep, right? Because travel is typically through the ground or the air. Usually they don't include trips on boats, but of course that would be a caveat there if you were doing like marine research. But typically when we talk about travel, we're talking about ground or air. If we're going to travel by air, of course we know that's just the price is whatever the cost of the ticket is, and that's not too difficult. But ground can be a little bit more difficult because are they getting a rental car? Are they driving themselves? Is it a limo? Do they come by subway or bus? What is it? How are they getting from place to place? And why are we covering the cost of that? And again, some of you are beholden to whatever the rate is, especially when it comes to costs of meals and lodging. We all know that doesn't actually cover the costs of meals and lodging, right? So we need to make sure that it's okay that the person that we're going to have to do the travel with is okay with making that in-kind contribution. Think about that. If you're going to go spend, you go to lunch, right? If somebody in your organization goes to lunch and it's $20, right? And you can only reimburse them 10 because, or 15, whatever you're beholden for the day, right? They're technically giving you the in-kind contribution of $5, right? So you need to make sure that people understand that they can only be reimbursed. And most of you are used to working with this, and let them know ahead of time, because you may not be able to take just their receipts, right, for that. So same thing with lodging. It's easy to know how much it eats and lodges, right? But if you're going to have something come up and you are asking for grant funds, make sure you can see if you can include the tipping and parking and tolls, because you're asking a lot of people if they have to pay those components, right? Think about how much that adds up in the course of a couple of days travel, okay? Okay, excuse me. So again, we said some of you are set by mileage reimbursement or meal reimbursement, so you don't really have a choice here on this travel. You just have to go with it. Let's talk about stipends. Stipends, you're like, oh, that's when you get paid. No, we already talked about when we get paid. That's personnel, right? So what is all this stipend stuff, right? So this stands by itself so we don't get misunderstandings, right? And remember when I said there were 9 categories and people tend to collapse some of them? This is one of those things. They put in, you know, wages and stipends, and they like, what's the difference? Well, it's funny because if we actually looked up the dictionary definition of a stipend, it says a regular or fixed payment for services, any periodic payment as a pension or allowance, and then it goes on to say the synonym is wage. And I just got done telling you it's not. So somebody needs to call up Webster's and tell them they got that wrong, okay? But here's why. This is what a stipend actually does. We think about a stipend in this way as it comes for this grant-funded project, right? So typically we think about stipends having to have 2 things, okay? And here they are on the slide. One is that they're probably associated with a training of some sort, and they have a pre-established level. Okay, so this is not your normal wage, right? A stipend is not something that we give somebody on a regular basis. That is a wage. We pay the people a wage. We also include the fringe. We take out all the taxes, okay? A stipend is something above and beyond that, made to an individual under a fellowship or training grant in accordance with pre-established levels. And here's what we mean by that, right? So think about this. Usually a stipend is considered a nice little bribe, right? Hey, we want you to come to this training on Saturday. We feel really bad, so we're gonna give you a $100 stipend, okay? And you're like, oh, sweet, $100, all right? But that's a stipend because it's associated with the training. You probably gave up some time, but it's got a pre-established level. So it doesn't matter, you know, what your actual salary is through the week. right? It may be like all 6 of you that work in that department. You may all make a little bit different. Your friends might be different, how long and you've been there. Stipends are not calculated based on what you already make as wages, right? A stipend says, hey, everybody who shows up to this training gets $100, okay? So it's really just this incentive for, sorry we did this to you. Hope this money makes it feel better, okay? I mean, like that's sort of the goal. It's like a peace offering in that way. So stipends are very different from wages. And again, they're preset and they're typically used for training. So if you're gonna use a stipend, that's what it's for, okay? All right, so, well, if a stipend is different, that should be clearly the same thing as an honorarium. No, right? Honorarium is this instant, little interesting payment that we just see every now and then, right? Well, relatively rare do we give an actual honorarium, okay? But this is not to be confused with a stipend because it's not. Okay, a stipend is used for training and it has a pre-established level, okay? That's a stipend. But honorariums are typically made for somebody's speech or presentation or performance. Again, if we look at the root word of honorarium, it actually means honor, right? So the basic concept of this kind of payment is to say thank you for showing your expertise, right? So the actual definition is a payment to a professional person for services on which no fee is set or legally obtainable. So there's no contract here, okay? There's nothing, you're not hiring somebody from outside, all right? You are giving them something to honor their presence for doing something for you, for your project, for your program, but you're not beholden to them to do so. There's not a pre-established limit. Now, typically, you're gonna talk to the person that's coming and let them know that here's what we give an honorarium. Sometimes you'll find that they don't tell you, right? I've had a few speaking engagements where they've treated it basically like a stipend, where they've told me ahead of time, even though we didn't have a contract, right? But other times you just show up and they say, well, we'll give an honorarium when we're finished. Okay, is that good, bad, or otherwise? You don't really know, right? So we think about it like this. So let's say we're back to one of those occurrences and events. We're having an open house, we're having a gala, and we have found the leading expert is Oprah on that topic, and we have called her and said, Oprah, can you come to the gala? And she says yes, okay? So she's gonna show up and she's gonna be there and she's gonna bring everybody here. The day comes, she shows up, she talks to you. Are you going to be able to pay Oprah for her time? No, right? You can't. Nobody can afford to have Oprah, right? So what we said to her instead is that we're going to have an honorarium. Same thing with Bill Gates, right? We could do the same kind of thing. What are we doing? They've shown up to help us out, to lead credence to this. And so we're honoring them with their presence by offering them an honorarium. We give them that contribution. There's no contract. We don't owe her anything for coming. This is just to honor her contribution to the field, the status she lends to the occasion, for her kindness, okay? And again, you'll see people using stipend and honorarium the same. Clearly they are not. Clearly they are not. One is for training, preset limits. One is to say, thank you, awesomeness, for coming, okay? So be careful that we're not considering using those two words as the same thing. All right, services and consultants. So many things that we could hire as services or consultants that could be direct cost. Now, when you look at this, you go, wait, services, consultants. Consultants absolutely are service providers, okay? If we're talking about a consultant, they are giving us a service. But we're naming them separately here because we want to think about this, because we get in trouble if we don't. In general, services are useful labors performed by an individual or organization on behalf of others. So again, if we list what some of these services might be, we see that some of our staff probably does some of this that we already have, right? They perform services probably all the time. As a matter of fact, all of us do, right? We all perform services in the fact of our time, for our employer, to our families, to our friends, for other people. I mean, how many times has somebody asked you to do something because you knew how to do it and maybe they didn't, or because they needed extra hands and you said, okay. So that you're providing services all the time. But services in which we pay a service provider are legally different from services performed by your paid staff. Your paid staff is already getting their wage. That's it. They're done. They get wage and fringe. We've already covered all that. We're not messing with them. We don't care that they give us service. We expect it. Okay. But the difference is that service providers and these consultants are not your employees. Okay. You do not withhold taxes or pay fringe to them. All right. This is what makes somebody a service provider or a consultant. So currently I'm actually working on a foster care evaluation. And as such, I am a service provider / consultant. I'm the lead evaluator. Okay, I am not an employee of that program, right? Because they do not withhold taxes and they do not give me fringe. What they give me is they're paying me on a contractual basis for services provided, okay? So when you see something on a budget that says contractual services in the grant application package or on your budget form, when you see it, it's talking about services, okay? Contractual services means services. But you have to be really careful here to make sure that you're not trying to sneak somebody in who should be considered a paid employee, okay? There are very big rules about this from the IRS. They do not want you getting somebody paid for services or consulting fees when they should be considered an actual employee, all right? Because if you are withholding taxes from them, they are an employee, right? And if you're not withholding taxes from them, then you can be a service provider or consultant, right? Okay, so again, even if you're tax exempt, the contractor that you're working with is not, and so they're going to be scrutinized just for that. So you want to make sure you can look on the IRS website to see who actually would qualify for this. What are you using them for, and where is that considered? You can talk to the CPA, you can talk to your financial people, just to make sure that you're not considering somebody one or the other. Again, if they're an employee, you're going to have to withhold taxes and provide fringe. If it's a service or consultant, it's a contract for services, and that's going to be the way that works. Okay. Let's talk about real property, which we already said has this formal definition, right? And here's the pieces. It's real land, any of the buildings or improvements on it, any soil, trees, minerals, or water, right? So what's really interesting here is that, think about this, we can actually create real property, right? Because if we do any sort of improvement, if we do some landscaping, if we add to the building, if we do something, we can actually add to that, right? So, and that improvement would be in terms of financial, right? Now, of course, in aesthetic terms, the tract of land might not be improved at all, and maybe environmentalists would not like what we did there, so we have to take those kind of things into consideration. But real property in itself, again, we go with that fair market value when we're considering real property, unless we've made changes to it. And then we need to actually take into consideration any changes, good or bad, that we have made to those buildings, okay? So sometimes, again, if we're going to have to make improvements in constructing buildings or doing whatnot, we're going to have to use those service providers that we just asked. And hopefully we can get those service providers to give us to that in kind, so we don't actually have to pay them for that, because a lot of expense. Notice service providers is probably one of the biggest things that we spend outside of payroll, because if you have to go outside of what you have in-house, you're going to pay the fair market value for it, right? And clearly you're typically paying for a professional of some sort. So that may be a really good opportunity for you to see if you can find somebody to offer that in kind, right? Because there are certain things that we just can't get away from as far as cost goes, as in a program or project. But if we can find some service providers to provide some of these things that would really cost quite a bit of money, that would really save us, and it would keep us from having to actually find a service provider to do it. Not always the case, but again, we could try. Equipment, here we go. This is my favorite part, right? Equipment versus material and supplies. All right, so let's look at what this definition is. The tangible, non-expendable personal property charged directly to an award having a useful life of more than 1 year and an acquisition cost of $5,000 or more per unit. However, consistent with recipient policy, lower limits may be established. In other words, here's what it is unless it isn't, right? This is what it means. Now, we're going to break this down just a little bit because it's a little bit trickier than what we think. Let me ask you, and I just want, clearly you don't have to answer me. But is an electric drill a piece of equipment? What about a bathroom scale? Is that equipment? How about the chair in your office? Or the one you're sitting on at home because you don't get to go to the office, right? Are those pieces of equipment? They certainly seem like it. Certainly seems like those are pieces of equipment. But are they equipment from a viewpoint of the grantor, right? So let's think about it. If we look at this, we can sort of break this down into a few pieces. And it gives us 4 characteristics, okay? Here they are. The item must be non-expendable, okay? So non-expendable just means that the item doesn't become used up, right? We don't use it up in the first use, right? Or that an item has too much value that we can't throw it out after we use it once. So examples of things that are expendable, things that we use up: batteries, pencils, paper, food, computer ink cartridges, right? Some things are expendable, but we can reuse them and then discarded later, like paper clips, plastic utensils, things of that nature, right? So it has to be non-expendable, not expendable. We can't use it up in the first time if it's going to be considered equipment. The item must be personal property. Well, if you don't own it, there's a problem there. Okay, so personal property is actually a legal term, all right? Remember when we talked about real property and that was land, the buildings on it, and all the soil, water, all those things, right? So that's the legal definition. Here's the cool part. If it's not real property, it's personal, okay? So that's the only distinction. If you can classify it as real, it is. If it's anything else, it's personal. Now here's what's cool. The reason for this is because, let's say it this way. The building that houses your organization is real property, right? But everything inside that building is personal property. And you're saying, well, it doesn't belong to a person per se. The organization owns it, right? Your office chair is not your own unless you've had enough of that office chair and ordered yourself a new one, right? But the reality is, for most of us, those aren't that's not our computer, that's not our desk, that's not our chair. So what do we do? So they don't really belong to a person, so how are they considered personal property? Well, they are, because actually, from a legal standpoint, any nonprofit or corporation exists as a person, right? An organization in and of itself is considered a person. So if there is something that belongs to that organization, it is considered personal property when you talk about property rights, okay? Now here's a little fun fact. Some of the personal equipment in the building is equipment. Some of it is not. It's like oaks and trees, right? So all oaks are trees, but all trees are not oaks. It's the same thing with personal property. All equipment is personal property because it's inside something, right? It's inside, and we're considering that a person. But all personal property is not equipment because it doesn't necessarily meet all the other criteria. So this one piece it meets, it's personal property, okay? But what else? So the third piece is this. The item must have a useful life of some defined term. What is that? Well, typically we see it's a year. It might be as many as 5, depending on what you're talking about. Every organization sets its own terms. And of course, you have to think about depreciation and the rate at which the IRS allows you to depreciate that cost of equipment. So what is considered a useful life? When does it depreciate enough to not be considered useful anymore? So you have to do a little bit of work on that. But usually what you'll see, and the grants typically tell you what equipment breakdown, like what's going to be considered that timeline. And again, typically 1 to 5 years is what we're looking at, okay? And so a lot of things we can still say, okay, let's think about this. Chairs, how about the chairs in our office? Are they non-expendable? Do we use those up the first time? No, we don't. They're not expendable. They are non-expendable, right? Are they personal property? Yes, because they're inside our organization. And should they have a useful life, hopefully of more than a year? Unless we're really tough on that chair, we should at least get a year, maybe 5, 6. Some of you have had that same chair for 15 years, right? But this last little caveat is what typically hangs us up on equipment, right? The cost of the item must meet or exceed an established amount. Now, in the definition that I showed you, it said $5,000. Now that's pretty high, and you don't typically see that at that range all the time, but I've seen some as low as 50, which seems unreasonably low. So what we really want, usually you're gonna see something in the middle, at probably about the $3,000 mark. Okay, so now unless you were very fortunate, is your office chair worth $3,000? No. So is it equipment? No, it's not. It meets all the other 3 criteria here, but it is not over that set limit. And again, you'd have to look at the grant to see what is considered equipment. What is that limit it must exceed? But let's think about this. If you have a really fancy copy machine, right, and you're making copies like crazy, that's probably gonna be, you're not gonna use it up in one use. It is personal property because it's inside your organization. It should have a useful life of more than 1 year, and it probably costs more than $3,000, right? Copy machines are not cheap, okay? So that would in fact be considered equipment. But then, so like our drill that we talked about, the bathroom scale, the office chair, none of those things are equipment, okay? Because they don't cost enough. So that's usually the caveat. So if we're thinking about equipment, what's the cost limit and does it meet that? Typically not. Okay, so there are relatively few things that are actually considered equipment, all right? So now that we know what that is, if it's not equipment, then what is it? It's a material or supply, because anything that is not equipment, notice, here's a really good definition. We can all walk away and remember that one. All personal property, excluding equipment. So if it's not equipment, it's a material or a supply. Okay, now this gets a little bit confusing as to how we categorize this, and fortunately for most of us, materials and supplies is going to be one line item on your budget, so you don't have to really worry about teasing it out too much. It might be good for you to think about that a little bit, but what we usually see, we sort of know what supplies are, right? Supplies are expendable, like things we use up all the time: ink, paper, chalk, toilet paper, right? Those are supplies. But we can get into a little bit tricky sometimes, because what about a computer USB? What about your little flash drive? It's too cheap to be equipment, but it can last a long time. It's not really expendable. What if we think about the wiring that holds all of our internet connection, right? It's not equipment because it doesn't cost enough, but it's not expended either, right? So those kind of things technically would still be supplies. But, right, some places actually do distinguish between the two. Things like USBs and wires are considered material, right? Because those are things that last a little bit longer. Supplies, we tend to think of things that are used up relatively quickly. So materials would be things like books or computer software or anything that we would need to build something, like wood or glass, plastic, metal, videos, audios, digital tape, okay? But most places, like I said, will combine these two together, so you don't really have to differentiate. But if you do have to differentiate. The first step is this: is it equipment or not? Probably not. So now we're in that material and supplies. Once we get to material and supplies, do we actually have to separate them or not? If we do, supplies are things we use up relatively quickly: coffee, toilet paper, things like that, paper. Materials are things that last a little bit longer and are technically then not equipment. Okay? What about facilities? Facilities are real property. They can be purchased, leased, rented, or used at no cost in kind. Wouldn't we all be so lucky if our facilities were given to us in kind, right? So what can we do about that? Well, we think of that. So these can be laboratories, libraries, playgrounds, exercise rooms, hospitals, video studios, health clinics, and the list could be practically endless as to what is a facility, right? But facilities, in fact, are real property, okay? So because they are somebody else's building, and how you classify them is dependent on how you're paying for them, right? So we would still look at the market value. If you purchased it, it would be the market value for what you paid for that. If you're leasing it, it's how much it leases for. If you're renting it, same thing. If it's being used at no cost, remember, we would go back to that first initial thing that we talked about, and we would actually categorize that based on what that would cost us for that set time, right? So again, if somebody's giving us an office building for the next 6 months, how much would it cost in our fair market value for that particular building for that time, if it's given to us as an in-kind? Okay. All right. So let's see. Technically, we would have been at break, but since we took one a little bit early, we'll go ahead and go into, if it's okay, Emily, we'll just go ahead and go into that little next section, and then we'll take another little short break after we finish that part before we get into the mystery budget.
Sounds good.
Okay. Oh, see, I put that in there and now you don't get it. All right, so let's talk a little bit about handling the grantor's money, right? All right, so now we have the money, we figured out what we did, we've created some sort of budget that we have to work with, we're beholden to that. We're gonna do what we said we're gonna do, right? We're gonna manage the money the way we said we're gonna manage the money. And now here comes the money. So of course it's gonna show up via check or electronic transfer, right? And what happens when we get to that point? First thing we need to do is make sure we assign it its own account, okay? So if you're new to this, if today you're thinking, okay, I'm about ready to get this grant, make sure that wherever that money is gonna be housed, that it's in and of itself by itself, okay? If you need it to be its own account, at the very least, it needs to be an own account number, right, in your chart of accounts. Now, you're either going to debit or credit that whole amount that you receive in the account. Now, whether or not you're going to consider that a debit or credit when you first take that money in depends on whether you're a full-fledged accountant or if you're like most of the rest of us, you don't really do double entry bookkeeping, and we're using just a regular accounting software. So if we're doing that, we're going to credit our account, okay? Because what we call a debit, an accountant calls a credit. All right, so there's a difference there, and that's why accounting seems to be scary for everybody. But part of it is that we can do it. I mean, that's the real, you know, I hope everybody realizes that today. If you're in a position where you're managing grants and you think, I have zero financial background whatsoever, it's okay, because you don't have to do it the way an accountant does to keep track of the money, right? You really just have to document. You have to do what you say you're going to do, all right? And if you do those things, you will still be okay as far as your grantor goes, all right? So now any cash that you receive from any other source, so let's say your organization is going to contribute, you know, helping you pay those matching funds, and it's a cash match, and so you've got $2,000 coming from them. all of that needs to go into that same account, right? You want to make sure all the money moving, because remember, the grant budget is not the same thing as the total thing. So any money that's coming in has to go into that same account so we can keep track of the differences. And we're going to need to keep track of what we have to pull out for the grant to let them know versus what our total project budget is, right? So our total project budget shows us how the cash total is to be expended, right? Normally, a grantor requires that the budget has several line items, often divided by the types of the direct costs that we just talked about, right? And this line item budget serves as our grant project budget, right? It tells us exactly how much we can spend on every type of direct expense. Now, those line items, as I mentioned, that's a good start. If we can elaborate on some of that, that's fantastic, okay? If we can elaborate on that. But sometimes the other piece of this that we can use, and I'm just going to pull this up because I pulled an example, is called the budget justification, or that budget narrative that I mentioned before, okay? So the budget narrative actually provides us the detail of exactly how we're going to spend the money. So remember when I said you wanted to manage, you want to do what you said you're going to do, and you want to spend the money the way you said you're going to spend it, okay? How do we know, right? Again, some of you are just being given this budget, so you need to go asking questions. Where is the budget justification? Where is the budget narrative? Okay, because that is going to specifically say, right? And I just actually pulled this one. This is an example from MSU, actually, from Montana State, about how they do their budget justifications for particular projects. Notice how it says here, this is a budget justification, sometimes actually called a budget narrative. And here's the thing, sometimes money, budget categories actually appear in your budget narrative, and sometimes it doesn't. It's always best though. Here's a general good rule. If you know the amount you're going to spend in the category, put it in there. It does two things. One, it lets them know what you're planning to spend the money on, and it lets you know later when you're keeping yourself in check if you did in fact do what you said you were going to do. Okay, so it's a really big deal here. All right, notice if we're looking at these categories, so key senior personnel. For every PI, co-PI, or project director, list, name, title, amount of time to be spent on the project, and what he or she will accomplish. And here's the example. It's in red. Look what they actually said. Dr. Smith is going to serve as the principal investigator. He's going to commit 2 summer months of effort to the project. Or she, I'm sorry. She will primarily be responsible for ... And that's where you would list the things that they were actually going to be responsible for. And the total salary requested for Dr. Smith for that 2 months' time is $11,111. And how did they get that? They calculated it, they said, from a base academic salary of $50,000. How much is her time worth for that 2 months if the base salary is $50,000? But they're telling you in that budget narrative, when you're writing that budget narrative, so if you're getting ready to ask for a grant, you're going to need the budget narrative, right? If you already have a grant, there should be a budget narrative, okay? If you're new to this and somebody else wrote the grant, go looking for the budget narrative, because this is what you told the grantor you were going to do with the money before they ever gave it to you, okay? This is what you need to go off of when you're trying to do your job. Oh my goodness, we need to pay Dr. Smith $11,111. How did we get to that? Because maybe next year we need Dr. Smith for 3 months. We say, okay, we're going to bump his salary. How do we figure out how much more? Well, it should come from that base academic salary of $50,000, because that's what we're using here. And it's in our budget narrative. We actually have that reference to that material. And then we can double check to make sure we're doing it properly, right? So here's the next piece. Research text, lab manager, students. It says the example here is one undergraduate student will commit 10 hours per week at $10 an hour for 30 weeks and will be responsible for XYZ, total requests $3,000, okay? And then they added those together and said, okay, the total personnel cost will be $14,111. So again, this budget narrative just gives you not only what you need to know that you need to do, it tells the grantor what you're going to do, and that's what they're going to hold you to. Okay, they're going to hold you to this budget. So your line item little budget that says, oh, your line item budget is actually going to say personnel 14,111, right? But actually, you're going to be paying Dr. Smith $11,100, and you're going to be paying an undergrad student $30,000. So it needs to be in there, right? You need to have that not only on your budget narrative, but probably even on your line item if you can do it. Okay, but you may only need to turn over this line item and personnel to your actual grant, but you're going to have to include the budget narrative anyway. And here's that fringe benefit. Look at this. Fringe benefits are calculated using current approved institutional rates of 19.016% for faculty and 0.440% for students. So key senior personnel benefits, notice they just did the math. Basic, simple, right? They found the fringe benefit. There is a rate, so they didn't have to calculate that part. And they said, okay, our key senior personnel benefits are $11,111 times 19.016%. So that's an extra $2,113 plus 2 months of health insurance, which is $1,054, and the student benefits total $13 for student worker, right? Notice how much we paid in fringe for the actual professor there. So, but still, total benefits that we have to take into account. Notice that's $4,233. Very big deal. See that fringe? That's going to come back to bite you if you don't calculate that properly, right? So get that fringe rate, see what you're doing, and make sure in your budget narrative you've accounted for all those things, right? Because look, our personnel cost is only $14,000, right? So we're thinking, oh, we can do this for 14 grand. No, we can't, because we still have this $4,000 that we need to include, right, of fringe. All right, and again, then it goes on to show you travel, all these things that we've just talked about. Oh, look, we've talked about travel, we've talked about personnel, we've talked, my goodness, we're actually doing this the right way. It's good. So equipment, here we go, total equipment. Now notice this, in order to complete AIM-2, a high power microscopy lens is required. This lens will enable researchers to detect the presence of damaged protons. Now, this, see, so their limit, look at this, what did they just do? Dun, 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 mistake, right? Because what did they say? Equipment is an item of lasting value with a cost of over $5,000. How much is this microscopy lens? $2,355. See, people make that mistake all the time. Why? Because you're thinking it's a microscopy lens, like it's really important, we're going to keep it forever, it's super expensive, it must be equipment. But by their own definition, they just did it wrong. And I didn't even do that. I just thought we were going through here, so that's awesome. That's hilarious. Okay, but again, make sure that, so that should actually be down in some other category, right? Notice they don't have a materials and supplies here, right? I don't see it. Here's other direct, oh, ooh, look, they try to put in their direct costs, supplies, and contractual services, right? Those are listed as separate categories. So here's supplies, here's contractual services, here's what they're contracting out for. And those are those direct costs that we did just talk about that, right? So the total direct cost, woo, $30,000, we're spending a lot here. And then here's the indirect cost, and see they have a rate. Indirect costs are calculated using MSU billings, federally negotiated rate of 51% of salaries and wages. So here's what that is total. So total indirect cost, $7,197. Again, this is not, you don't have to be financial wizards to be able to do some of these indirect cost type things in the fringe. You just need to ask what your rate is. What rate do you go by? And then the math is actually not that difficult, because you take how much do you have times whatever this rate is, and that will give you the indirect cost that you need to go on there, okay? Total requested amount for this particular thing, $37,954. So, and I did put, and I'll send that. I added that into a reference, but I did it later than after Emily sent it to you. So I'll make sure and send this link, and she'll get that out to you. And again, I just Googled it, and I picked this one honestly because it was MSU billings, and that's Montana. So there we go, let's use it. All right, okay. So that should get us to there. All right. Now that we've looked a little bit at that budget narrative, how do we handle it? Like, how are we physically handling this? Okay, so first of all, we want to make sure that all expenditures are by check, never with cash, right? The exception to this rule of no cash is, of course, petty cash, right? For some of us, we may have to use it, but let's try to keep that petty cash low, right? Under typically $20 is as much as we need for petty cash, unless you have a big reason for needing more than $20. But you want to write a check out and call it petty cash to start with. And then every time anybody takes anything out of petty cash, make sure you have that receipt, right? And of course, if you keep the $20, that way if somebody has to come up with putting more money back into petty cash because somebody forgot to turn in a receipt, it's not going to be for that much, right? So you always want to make sure that you're doing that accounting and keep that petty cash low. You don't want any cash walking off for whatever reason, right? You want to protect yourself and anybody else that's working with them. So the next thing I would suggest here is very important, keeping authority to spend the money as concentrated as possible, okay? Now, granted, staff members are going to have to be able to obtain the stuff and do their jobs. We get that. But the purchase of these things should be centralized, right? You want that spending authority in just one people or a small group of people, depending on how large your program or project is or your group, right? And one way to really do this to show financial responsibility is to require 2 signatures on checks. Okay, so if you're in charge of the check writing, see if you can have a second signer, right? I have this, I'm fortunate that we have this. I have to have this for my treasurer for the booster board, but it's actually great that I have to do that, okay? Because here's what that does, it covers me. So let's say I have an invoice and I've paid that invoice. That's great, I read the check out, whatever, and I still have the invoice, I know I have that paperwork. But there's never a question then because somebody else had to sign off on the fact that I paid that invoice, okay? So they know it is for something that we actually use. I didn't create this invoice, I didn't make it up. They know that we did in fact buy new uniforms for the basketball and it did in fact cost $12,000. Go ahead, try to write a check for that amount. That kills you, especially when it's not your own money, right? So it's great to have somebody else have to sign when I have to write out a check for that much, right? That is not actually my money, but that I'm managing for the program. So it's always good if you're not doing that, if you don't have 2 people to sign checks. Now, make sure it's somebody who's there. If you're going to get a second signer. I'm lucky on the booster board. You know, we have lots of members to booster, but we actually have 4 people who are officers. Okay, 4 officers. So what we have is I'm actually responsible as the treasurer. My signature has to be on every check. But the other 3 have signed up with the bank to allow them to be check signers. So as long as one of the other 3 ladies is available, I have an option of a second signer. So I don't have to just go to one person, but I only need 1 more to get it done, okay? So really just a good way of check and balance and making sure that you are covered, right? You wanna be sure you've covered yourself as much as you can as well. Now, of course, we wanna require complete documentation on anything we spend of any size or any kind, big or little. We get lucky here because the good part about when we're spending money is a lot of times, especially if we've done it correctly, we already have the documentation, right? So complete documentation of the transaction is actually just protection for you. So we want to make sure everything that's financial we have track of. We want to be able to prove where every penny went, right? Grantors are not happy if we can't show them where the money went, right? Show me the money. Well, they want to know, show me where it went, right? What did you do? So one, there's really only 2 reasons to not have the documentation for this. The first one is that the money was spent in the ways that you don't want to tell the grantor, which is bad, right? Or the second one is that you're sloppy or inept at handling the finances and you're like, oh, shoot. And either one of those things are not acceptable to grantors. So there's an example. You have a record of expenditure right here in your handouts for the day. So here's the person, again, just this is a generic one that you can use. How much did it cost? What did we get it for? What was our purchase order? This one's, were the items in good condition? Why did we pay for it? Did we have this? Who was it approved by? So that maybe that's you that's writing the check, and then maybe you have your second signer here. So just, again, a simple little record of expenditure to help keep it together. And it doesn't matter what kind of forms you're using, as long as you use the same forms, right? Don't have the forms for these kind of things and forms for these kind of, if they're the same type of thing, make sure that you're keeping the same format so you're getting the right information from all of them. Because I think that's, somebody's like, oh, just write that down. Oh, just keep track. You know, you don't want to do that, right? You want to make sure it's all the same. Okay, so up until this point, we've actually looked at finances from the viewpoint of the grantor, right? But you have more responsibility than that. And that seems unfortunate, but it's just the way it works, right? While you have to answer for the money the way the grantor says so, you also have to think about this. Is your program or project housed within another organization? If it is, you're going to need to take care of your finances also in the way that they want you to. Maybe it's governmental that you need to think about. So maybe federal government, federal regulations, state regulations, local, county, city, any other levels that apply to your location, okay? So who you're answering to, you are actually responsible that your financial transactions meet all applicable federal, state, and local laws and regulations. So it's not just what does the grantor want. Are you following all of the rules and regulations for your county, city, federal government, right? You are actually responsible that all your financial transaction meets all of them, okay? Now that really sounds like a lot, but here's the good part. All you have to do is spend the money exactly the way you said you would and keep a record, okay? That's it. Get all this to it, but really that's when it gets overwhelming. Just stop and think about, okay, what is my job here? Spend the money exactly as you said you would and keep your records. Because if you do that, every single thing that the federal, the state, the local, or the grantor is going to ask you, you got it, okay? So it doesn't matter. You're going to have that. So it doesn't have to be overwhelming and it doesn't have to be scary. Just keep it, Keep it. Document, 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 right? All right. Of course, we want to keep regular financial reports. That's a huge deal for us. And how do we do that? Well, for sure, at the end of every month, right? As the manager of the project, we have to require regular financial reports that do the detail. We want to see them at least once a month, right? At least once a month, maybe even once a week, depends on how much of a micromanager you are, right? And that all depends on how you're running your organization. So we want to see the detailed current balance in the grant account, the balances in the budget line items, and all the expenditures since the last report, because this represents the financial life of your project. A complete series of this actually is a record in outline form of your financial life, right? And you do actually also have a quick monthly financial report in your template, in your packet. So again, it's basic, but here it is. Here's what you had, here's what you spent, here's how much you have left, right? Just at least we have to have something. And again, we're gonna be able to use some of this information that we have off here later to do a variance analysis to sort of see where we are, do a little checkup on our budgeting type thing. So this is gonna be good. Again, if you already have one of these, that's great. If you don't, make sure you're having a monthly financial report. All right, let's talk a little bit about payroll. Now, hopefully you'll get lucky and payroll will be taken care of by the payroll department, right? But that's not always the case. So we do have three possibilities for handling payroll. One, like I just said, your organization actually has a payroll officer person, and that's where we're gonna handle that payroll, right? So maybe we get lucky and we don't even have to worry about it. But the second thing is that the project itself will have to have a payroll person or a payroll office. Maybe you're just like the only little small entity where you're at and there is no payroll anything, and so it's gonna be your job to do that. And so maybe you will have to handle that payroll. Or the last option here is that you might actually have to contract for services. You might need a service provider to contract to handle payroll. Some of you, I know that your counties, in fact, do have, right, payroll is done by a service provider, you're done by an outside place. So it's not, you don't even have it in-house. So regardless of that method, you're gonna have to think about a few things. Now, again, they're not overly complicated, but they are. Here's what I always say to students. You know, I teach a lot of methods courses, and every time I start when we talk about statistics or methods or money of any sort, right, everybody's always scared to death of it, right? And I always tell them this: it's not hard, it's new. Okay, think about it. It's not hard, it's new. Most of us have done our best to keep up with our checkbooks, right? Which are not even any more checkbooks. It's all online stuff, right? Oh, debit here, debit here, debit here, right? But we're not, when we have been given this kind of money and we're responsible for it, it automatically seems hard because it's new, okay? It's not necessarily hard, it's just new, okay? So if you're the one that's gonna be in charge of doing this, and even if you have to deal with it at all, if you're managing the project, you will have to deal with payroll of some sort, and we'll see how in a minute. But you do have a few options here, but just remember, this can be learned. There are steps to follow and things that you can do, okay? Now, let's go here. All right, so the process of payroll accounting is very exact. Practitioners who do this operate with exactness and precision. They have to. Think about it. They're handling the one thing people care the most about, and that's money. Why do you care the most about it? Because it pays your bills, right? I mean, you have to have that. And so think about your payroll department. Like literally their job, they're so focused on what they're doing because they're directly answerable to every employee who gets a check, right? What if they don't take out enough taxes? What if they take out too much taxes? What if they didn't pay you by your actual rate? What if they didn't take out the fringe? I mean, think about all the things that payroll actually has to do that. So a payroll department is actually very focused, right? So if your job, if you have a payroll department, you have to do your job to not mess them up, okay? That's the key. You have to complete all the paperwork that you're supposed to. Get it filed, do it on time. Make sure that all the financial transactions are taking place when you're supposed to. You do not want payroll being held up because you didn't do your job. And if you're lucky enough that you have a payroll department, for certain, do not put them behind, right? Okay, now, one thing that we have to think about in this is internal transfer of funds. So remember when I told you that we were gonna have to put that money into an account when it first comes in? As the manager of that, probably you're gonna be in charge of distributing funds, which also means that even if you're not doing payroll yourself, you're gonna have to transfer that funds to payroll so they can pay people, right? So you're still gonna have to be in charge of that money at some point. And anything else that has to take care of, so deposit of taxes that are withheld from employees, deposit of employer contributions like the FICA, the SUTA, and the FUTA that we talked about earlier. If they have healthcare insurance, retirement, all that fringe, anything that you're going to need so that payroll can do their job, you're going to have to internally transfer those funds to do it. So that means you have to know enough from the payroll to know what that stuff would cost. Okay, that's why we covered those things, because some of you I know we're probably thinking, I don't do payroll, why do I need to worry about fringe? Well, you do, because it has to go in your budget, and because you're going to actually have to transfer that internal transfer funds to do so. Okay. Now, the other kicker to this is the paperwork that goes with it, right? So you're going to need to make sure that their W-2s are filed with Social Security. You're going to have to give the W-2s to employees to begin with. You need to make sure you've completed, have obtained completed W-4 forms, right? Because the quarterly supports, you have to be responsible for doing quarterly SUTA reports and maintenance of payroll tax deposit receipts. So the federal government and the state government do not look upon you very well if you have not done these things on time, right? So you also have a personnel reporting checklist in your packet. This just helps us, I think, to look. And again, you would want this for all of the people that you have and for the period. You could either do it like this. This is just for one period, so it could be all the people. But look, it actually just gives you a checklist. So here's the things. You put a check mark over here. Did you transfer the funds? Did you deposit the state taxes? Did you deposit the FICA funds, right? And when did you do that for? What period was for that, or who was for that? So I would rearrange this just a little bit, but at least it covers like all those things I just talked about. Have you done those pieces? And for some of you, maybe you don't have to do all of this because payroll takes care of some of that for you. But if you're the one in charge of having to do this, this is really nice to make sure you don't forget something really important. Okay. Like I said, personnel reporting. Now, purchasing services, okay? Most of you won't have to do this, but you might. You might have to, maybe you have to go outside to get payroll even. So think about this. You need to know exactly what it is that you want. Make a list. What do you need them to do specifically for you? Because if you don't, if you just be like, oh, we need to hire somebody to do, no, what do you need? We're specifically going to need somebody to do payroll for 5 employees. It's going to, right? What do we need? So that's first. You want to create a job specification document. So here's the little things that we expect. Here's what we need from you. Here's what we want you to do. All right. Then we're going to want to get bids that incorporate this. Okay. Now you may say, what? If we're not going to do like massive overhaul where we need big equipment, we don't necessarily need a bid. Now I did put a bid packet in your handouts. It's still good. Okay. Because here's the thing, even if you don't get bids, maybe you just know so-and-so, maybe that's the only accountant in town. Okay. So maybe that's it. That's it. That's all your choice. But even so, put on there that you didn't do the bid, but pull that bid request and put that you did it because that was the only person that was available. So if somebody asks later why, I mean, if you pick your brother-in-law to be the accountant, you better have a reason. You better have at least looked into seeing if there's somebody else that's there, and a bid request will help you do that. You want to make sure that you're covering the basis if you have to contract out for services, okay? You want to get references and check with the references. And then, of course, if you accept somebody's bid, you want to respond to that in writing. You for sure want to oversee the work regularly. Here's fun. This one we forget. Be in charge. They're working for you. And you're thinking, well, I don't know anything about payroll. How am I supposed to do that? Well, are they doing it on time? Are they covering it? Are they taking out the taxes they're supposed to be doing? Are your people getting paid when they're supposed to get paid? Well, if they are, then okay, right? And if you don't know what you're doing as far as looking for service providers, ask someone else, right? That's the good part about humans, right? We're all good at different things, and almost always you can find somebody that either works in your organization or with you that knows more than you realize that they do, right? Because we all wear multiple hats for lots of things. So we can see if we're not experts in some of these services that we're having to contract out for, we can actually ask for those kind of things for help, okay? And pay only when the work is completed to your complete satisfaction. When you contract out for services, right? Again, this is not the time to be wishy-washy, all right? You don't just be like, oh, they sort of did it, it's good, right? I mean, this is your grant money you're using, and you want your program or project to move forward. And if you actually get to the point where you have to pay for services, make sure you get what you asked for and what you're paying for, right? It's okay to say, no, this isn't enough if it doesn't meet the contractual obligations of what was in the bid, okay? Again, nobody likes to be that person, but that's part of the job as the management. So a couple little things here just at the end. These are just little fun management maxims. They're super easy. There's 2 slides worth on this. And after we get through these, we'll just take another little 5-minute break before we move to the next little round. So here they are. First of all, we want to comply with our organization's financial policies and procedures. Simple, right? Basically, these you could really print out these 2 slides and hang them in your office, all right? Because this is just the things that you want to make sure you're doing, all right? Spend the money the way you said you would in the proposal. Document every single financial transaction, no matter how small. Use professionals when you don't know what you're doing, okay? If you can't do something, contract out for that. Then you have to comply with the reporting requirements of your grantor, your organization, and federal, state, and local governments. That's the kicker, right? But remember, if you spend the money the way you said you would and you keep a record of it, you're going to be able to do that. Be thorough. This is the budget and all the budget narrative and all the documentation that you do. This is not the time to skimp out, okay? You don't want to be doing that. You want to be on time. Remember, payroll's counting on you. The people are counting on you. Your project, your program are counting on you. When you are not on time, everything else below you gets pushed back, right? Be prudent. Think about this. Is this what you need to do? Is this a decision? Did you pick the right person for service providing, right? Is there somebody else that's better? You want to be honest. When in doubt, ask, okay? Always ask. Now, again, some people are always worried about asking the grantor, but they actually typically have a fiscal person that's with the grant because they know people are going to have questions about how do we manage the grant and how do we do this and where do we put this particular thing in the budget. Call them, right? Email them. Whoever your contact person is, I'm certain all of you have a contact person for your grant, right? Do not wait till the end of the year and think you have it figured out and then, oh my goodness, you put it in the wrong spot, or oh my goodness, you didn't do this, you didn't record this. You're going to be in a lot of trouble, so you don't want to do that. So when in doubt, ask the grantor's fiscal thing, okay? So that's our financial management maxims. Like I said, we could probably print those off and stick them on our wall and keep us beholden to doing what we said we're going to do. So let's go ahead. We're going to come back and do a little fun activity that is actually going to put us in a breakout room. You know, when I say fun, it's budgeting, but it's not, okay? It's already been done for you. We're just going to take a look at it. So let's take 5 minutes and get regrouped, and then we'll come back and go to breakout.